Red-hot retail sales soothe fears over cooling US consumers. Welcome to Market Insight. I'm David Pollard. Markets got a positive jolt today from a hotter than expected US retail sales reading for July, when sales jumped 1% after a downwardly revised 0.2% drop in June. Economists had forecast a rise of just 0.3% in this latest reading, which allays fears of a slowdown in consumer demand but also dampens hopes of a 50 basis points cut from the Fed in September. Well, I'm joined for expert analysis by Jeroen Martis, Director of Consumer Research at the London Stock Exchange Group. Welcome, Jeroen. What is going on here? Are US consumers still hungry to spend despite all the gloomy recent talk about them?
Well, the July retail sales numbers today definitely underline how important the value proposition is to the consumer right now. As you can recall, the month of July was filled with promotions driven mainly by Amazon Prime, and then all of the other discounters and retailers tried to jump into the event. In a collaboration with Centric Market Intelligence, LSEG discovered that the amount of merchandise on sale went off the roof. In fact, it was the strongest we've seen in the entire 2024, this year so far. This suggests, and is in line with what retailers are telling us about the consumers, that the consumers being very strategic and waiting for these promotional events in order to open up their wallets. They are very price conscious, and they're thinking twice about how to spend their money, especially with big ticket items over $1,000.
So what other surprises, positive or negative, have you seen in this latest data?
So the report today is in line with what we've seen with retail earnings, which is that the e-commerce portion of it grew 6.7% year over year. This is the strongest growth year over year in the July report. And this goes hand in hand with what Walmart reported today. It's 8 consecutive quarter of double-digit e-commerce growth. Home Depot saw 4%, robust 4% e-commerce growth, and said that almost half of those orders were fulfilled in store, which is exactly what Walmart said today. So this is underlining the fact that the omni-channel, the e-commerce experience is very crucial for consumers. The American consumer is all about instant gratification, and they want to be able to order something on their mobile phone, pick it up on their way home from work. And the fact that these retailers are able to give this to the consumer is what's really driving those sales. It's driving the US retail sales, Walmart and Home Depot. So consumers are value oriented, and they are looking for effective ways to shop.
And yet another interesting story today is that Tapestry beat forecasts as consumers apparently are still going for affordable luxury.
Well, it's interesting because when you look deeper into the numbers, there was weakness in the United States, weakness in China. A lot of that strength came from Europe. And as you can recall, this was an Olympic summer where everybody gravitated towards Europe. Even Disney told us that their high-end consumer was traveling to Europe as opposed to going to the parks. So, as we know, the consumer is very value conscious right now, and they are able to still offer the consumer, the middle and upper class consumer, luxury for a little bit less when you compare to the other high-end names. So as a result, we saw that Tapestry did better in that group in Europe, but still there's a lot of weakness in the United States and China.
So let's look at the consumer in a little more detail. Your primary consumer sentiment index, in that the current index is down, but the jobs and expectations indices both show significant upticks. So what should we make of that?
So it's a little bit of a mixed bag, and that's usually what traditionally happens in an election year. And that's also what Walmart said today during their earnings call, that they were a little bit hesitant about the second half of the year because it's an election year, and then the consumer tends to be very volatile. Still, having said all that, right now, the latest consumer confidence shows that they are a little bit concerned. Consumers are a little bit concerned about the current situation. That is definitely manifested in the latest earnings numbers. And even when we look at the projections for the third quarter, right? Looking forward to the third quarter, we're receiving a lot of negative guidance. And then our LSEG Retail and Restaurant Index is expected to drop modestly to low single digits, suggesting that the consumer is cautious into the third quarter, is thinking twice about those big expenditures. And as a result, analysts and retailers are being very cautious with their guidance.
So in that environment and outside of Walmart, who are the current winners and losers among the big name retailers? We saw, as you mentioned, a declining outlook from Home Depot earlier this week.
So it's all about value. Those discounters is where the consumer is gravitating. They're gravitating towards Amazon, Walmart, Costco, and then off-price retailers like Ross and TJX are also going to be benefiting from this macroeconomic climate. We dig a little bit deeper into the numbers. Old Navy is expected to give Gap a boost. So analysts polled by LSEC are bullish on Gap and believe that Gap is likely to beat earnings estimates and post a positive surprise. And then you have those retailers that have a loyal following, like Abercrombie and American Eagle. You're going to see that the consumers are going to gravitate towards those retailers. But again, it's going to be when they have those promotional discounts, like the Labor weekend coming up soon in September. So it's the value-oriented companies, the discounters, are going to be the strongest this earnings season. In fact, for the remainder of the year, given the climate.
Okay, Jérôme Martis, Director of Consumer Research at the London Stock Exchange Group. It's been great to hear your thoughts today. Many thanks for being with us. That is Market Insight. We have more videos on Reuters.com.